Today I'll be showing you an easy option strategy that you can do on a stock that doesn't move all that much. So for this example, I'll be showing you on Ford. If there's another stock that you can think of that doesn't move all that much, then obviously apply this strategy to there. This will just be the example. But on Ford, you can see it doesn't move all that much, maybe about $1. It rises back up to about where it was, around the 1490s, drops around 1390, so it only moves about $1. This was in the past week. So we'll come over here and we'll click Trade Ford Options. And this is called a long call Condor. So we're going to pick our expiration date. We're going to pick out, it's May 3rd right now when I'm recording this. We're going to pick out May 13th just to give it a little more time to settle in between this spot that we want it to be, because like I said, we're going to do it on a stock that doesn't move all that much. So we're going to try to place our range where we think Ford will end up on May 13th to maximize our profits. So for the long call Condor, first what you're going to want to do is you're going to want to buy a call at the bottom point of where you think Ford wants to be, like the minimum you think Ford would be. So if I think Ford's going to rise a little bit from here, and I think 1450 is going to be the minimum, let's buy our call right there. And then next what you're going to do is you're going to sell a call. For this example, we'll go one above. So you're just going to sell the calls in the filler spots, and you're going to buy calls on the borders, and that'll limit your skew of where you think the price will be. So we'll sell one more call, we'll go one more up. So you can see we're selling these two calls, and then we bought this gray one right here. And then now we're going to fill out the border. So this is our border. We bought a call here, and now we're just going to close off the other border right here. So you can see we bought the two on the outsides and then sold the two in the middle. And what you can see down here is it should look something like this, where your max loss is limited to only $15 in this example. And then you should see this little pyramid that plateaus off, and then it starts to sink again once you reach this limit, 1585. So this is the range that I would put if I think Ford's going to rise a little bit, but still stay decently stagnant. Because right now it's trading at 1460. So over the course of the next 10 days, I think Ford's going to rise a little bit, maybe sink back down, maybe rise a little bit again, maybe sink back down, and then around May 13th, I'm hoping it's somewhere in here. We're going to make about $35. And I'll show you how to even increase those profits even more. So we're going to come up here, you're going to click this drop down arrow, and then make sure it's on normal 1-to-1 ratio. Then you click on continue. So right here you're going to see contracts. So you can click on this. For example, let's click 5. So now we're going to see we control 5 contracts. So everything we did, all those prices are now times 5. So if we come back here, we do 1, it's 1 by default. You'll see your max loss is 15, and your max gain is 35. So now we're going to do this to 5 contracts instead of 1, multiplies everything by 5. So now our max loss will be 75, but then our max profit is going to be 175. So as long as you're correct in this skew of about $1.20 from 1465 to 1585, as long as you're in that dollar range, $1.20 range, you're going to be up from somewhere between, maybe in the 50s of dollars all the way up to 175, and then on the other end of it, it'll drop down a little bit, but you can still be in the profit zone. And then you can see here at $16, your max loss has occurred, which makes sense because that was one of our borders. So that's where it ties into it. Your border here at $16 is that red dot where the max loss caps off. And then right here at 1450, which makes sense, this is our other border. Right here at this red dot, 1450, your max loss is obtained there. It's minus $75, and then it caps off. So we'll come over here, we're going to come to Option Strat, where we can visualize this a little bit better. So we click on Build, and then like I said, we're going to do the long call Condor, which is right in the middle, underneath neutral. And then we're going to enter in our ticker symbol, Ford. And then all we do is copy, let's click back. What we're going to do is copy this out, and we're going to copy it into Option Strat. And then make sure you also choose the correct expiration date. So we're doing this so that we can visualize everything better, so we can see how much money we earn per day. So we come over here. So we're going to do the borders first. We bought a $16 call, and we bought a $14.50 call. So the bought is on the top. So we bought a $14.50 and a 16, and then sell is on the bottom. So we can come down here, 15 and 15.50. So we're going to move these two to 15 and 15.50. So there we go. Now we can see, now we're going to increase the chart range so that you can see. Actually, we'll put it about right there so we can see. Okay, so you can see, like I said, you want Ford to be trading pretty neutrally. Like for our example, we wanted Ford to rise a little bit. As you can see, this dotted line right here where my mouse is. That's where Ford is currently. So like I said, we want it to rise a little bit, but then stay pretty neutral, and so that we can have our profits. And obviously this is going to say $35 because it's imagining that we only did one contract. So that's why that says $35. But like I said, if we did, maybe even 3 contracts, there we go. If you did 3 contracts, 105, and then max loss is 45, put it somewhere in the middle. But over here in option strat, obviously we're not gonna mess with that. So for now it'll just say 35, but if you increase the contracts, that total will multiply. But you can see even the time, even by the times, you can see by what day of the week, what time it'll be, where your profit will be or where your loss will be. So I think that this is a great way to visualize it. You can mess with the implied volatility, but for now we'll just reset it to what it is. So yeah, I like to use option strat to look at how the trade actually has to play out before I put it in. I suggest you do the same. If you have any other questions regarding the strategy, please comment them down below and I'll be happy to answer them. And yeah, thank you for watching.